Assalamu alaikum friends, welcome to lecture 6 of AFM. Today we are going to go through free cash flows. Free cash flow is used in multiple areas. We'll be going through free cash flow also in acquisition and merger when we have to value a company. But here we are learning free cash flow from the point of investment appraisal. Here we are going to focus on two things. One is free cash flow and the other one is known as free cash flow to equity. You must know that there are some differences between these two because often students get confused between these two terms. So let us discover what is free cash flow. Okay. Mostly calculation questions comes from this area more than the discussion. Okay. So free cash flow is how do you calculate free cash flow? You need to understand the starting point is your accounting information, right? Already some accounting information has been prepared. Now you are working back from profit. You are converting the profit to cash. That's what you are doing to find free cash flow. Profit will be given to you. So from profit, you are working back. Okay. This is how it's done. Okay. And make sure that you remember this format. You memorize it. You should know this format. The way it is. Otherwise, you will not be able to do questions. But definitely one or two elements might not be there all the time out of this list. But at least you should know what is the starting point. What do you have to deduct? What do you have to add? So starting is net operating profit. Profit before interest and tax is the starting point. And this will be given to you. Second, tax you deduct. Because tax is a cash expense, right? You deduct it. Third, add back depreciation. Why? Because depreciation is a non-cash item. You have already deducted depreciation to arrive at net operating profit. So when you have to convert the profit to cash, you have to add it back. Okay, all the non-cash items add back, cash items. If it's an inflow, add. If it's an outflow, deduct. Operating, then you get the operating cash flow. After that, you see, you started with profit and now you reached land up to cash flow. But this is operating. We want free cash flow. What is free cash flow? Definition I didn't tell you. But first we'll go through the calculation and then in the next slide I will tell you what is the definition of free cash flow. Less investment. So investment you deduct. What is it? NCA. NCA is non-current asset. I just wrote the initials, the short form. Replacement non-current asset. When you invest in a non-current asset, it's an outflow. Incremental. When non-current asset increases, how does it increase? Obviously, you have to pay cash, right? To increase your non-current asset, cash is going out. So again, deduct. It's in bracket, means you are deducting it. Working capital increment also you deduct. And finally, what you get is known as free cash flow. This format you should know. Okay, and the free cash flow and free cash flow to equity and flow is little different. That difference you have to know, because otherwise you will very easily get confused between the two terms. They are not same. Now, free cash flow to equity. First, I will explain you this also. What is the difference? Difference is free cash flow, okay, FCF calculates free cash flow before deducting interest or dividend payment. You see? But free cash flow to equity can only be calculated by taking the free cash flow calculated before. That means FCF, and you do this following adjustments with that free cash flow. That means to calculate free cash flow to equity, you already must have calculated free cash flow first. Without that, you cannot proceed to free cash flow to equity. With your free cash flow, you do some adjustments, add, deduct, and get the free cash flow to equity. What do you do that? First, deduct. Remember I told you free cash flow, you do not deduct interest and dividend. But in free cash flow to equity, to get it, you have to deduct your dividend. Sorry, your debt interest. Your interest you have to deduct from free cash flow. Then any debt repayments, deduct. Third, add any cash that is raised from debt. Maybe you have taken a loan through which you are raising cash. Add it. And after these three adjustments are done, you get what is known as free cash flow to equity. And this free cash flow to equity also comes in your section A of your AFM syllabus. which is the role of the senior financial advisor, which I didn't cover yet because that will be my last section to cover. I've started with the investment appraisal, which is section B of your syllabus, if you have gone through the AFM syllabus, but it will again come. I told you free cash flow comes in many areas in your AFM syllabus. So in practical terms, you can say free cash flow to equity is the same as dividend capacity. Sometimes they might just ask what is the dividend capacity of a firm. That means, in short, they are telling you to calculate free cash flow to equity. What is the meaning of it? See, free cash flow to equity means all the expenses, all the obligatory things has been deducted. What is the debt, interest? You anyway have to pay with the cash. It's compulsory, so you deduct it. Whatever the cash is remaining with, now you can pay it as a dividend. Hence, dividend capacity, right? Now, cash that is not retained. Now I'll tell you what is free cash flow. Okay, I know it's a suspense after so many calculation and all. I'm telling you the definition. Free cash flow means any cash, okay, that is reinvested in a business. Cash that is not retained and then reinvested in a business. That is the meaning of free cash flow. That means with this free, why is it free? The term free is because with this cash flow you can do anything. It's yours entirely. You don't have to pay your debt holders. You don't have to pay tax with it because you've done it everything. That is the meaning of free cash flow. All the compulsory items deducted because expenses, your interest, your tax, anyway they have to be paid from the cash only. So you deduct them. Whatever's remaining is known as free cash flow. Now it's up to you. You retain it, you reinvest it, is up to you. That's why the term free cash flow. So now let us do a question on free cash flow and free cash flow to equity before we proceed further. So now let us do a question on free cash flow and free cash flow to equity. Okay, here you have been given operating profit, depreciation, increase in working capital, capital expenditure to replace existing assets and new investment, interest paid, loan repaid, and tax paid. This is a pretty easy question. Okay, part A, use the standard approach. Part B, to show the free cash flow to equity. Okay, standard approach means free cash flow they are asking. So in free cash flow, what do you do? What is the starting point? I told you the starting point is net operating profit before interest and tax. Okay, so for part A, it is net operating profit before interest and tax. I'm just writing the initial. What is it? It is this operating profit 300. Okay, next, depreciation you add. Okay, so add depreciation 120. If you know, this is where the formula helps you, and this formula is not there in your formula sheet, by the way. Okay, the FCF and the FCFE. I've already shown you in my previous lecture, lecture 5. Please go and check if you have not checked it, because I have done Excel question over there. I've shown you on Excel how to do a question for adjusted present value. Okay, but not every question I'll be able to do in Excel, and it's not worth it. I mean, this is pretty easy. So that's the reason I didn't do it in Excel. Then you deduct tax. Okay, 140, this one. What you get is known as what? Okay, after you add depreciation and deduct tax, it is known as operating cash flow. Please label it. You have to label it. And this question you can do it in Excel. Next, this is not over. You have to get free cash flow, so less investment. Okay, less investment. You can write this as a subheading. Under that you can write all the investment. Replacement, non-current asset investment, incremental, non-current asset investment, incremental working capital, Investment, I know it has all these three. So to replace non-current asset, what is it? It's 10. This one, deduct. Then capital expenditure on new investment, 15, deduct. And working capital, 50, increase in working capital is an outflow, deduct. So 10, 15 and 50 you deduct. All this you deduct from operating cash flow, and what you get is known as FCF, free cash flow, which is 205. You see? So almost all the things you have taken into account. Only two things you didn't take. One is interest paid and the other one is loan paid. These two things you didn't take in A. As I told, interest and loan you did not deduct. Now let us come to part B. Part B. Free cash flow to equity you are calculating for. Where do you start? Starting point is FCF, which is 205, already you calculated. Deduct your interest, deduct your tax or loans repaid, okay? Not tax, sorry, loans repaid. All your debt basically. And any component relating to debt, for example, interest. Loan is a debt and interest on that loan is a component of that debt. Deduct both. So interest is 5 and loan repaid was 20. Right? This 5 and 20, now you're taking it in FCFE. Usually calculations in FCFE are small, only minor like deductions like interest and loans repaid. But in FCF, there are majority things to do. So what you get is 180. Definitely, your FCFE will be less than your FCF because you're deducting interest and loans repaid also. Okay. In short, if I have to tell what is FCF, FCF is, this is the value to the value of the whole firm. If you're valuing the company in terms of valuation, if you're using it, which is in mergers and acquisition, it is the value of the whole company. When we come to FCFE, the word equity says it is only the value to the equity holders. This is how you remember. Just see at the end there is a letter E. E means equity. So value to the equity holders only. Now do you understand why you deduct debt, interest and loan repaid? You deduct it and whatever is remaining is for the equity holders. But here it goes to everything. This 205 goes to equity holders. From here equity holders also will get as well as the debt holders. That's why you didn't deduct any debt or any interest on the debt. Now it makes more sense, I think, right? So now remember, it's a cash flow, right? How normally cash flow when we were doing net present value, we told cash flow increases, inflation is there, it keeps increasing. Same way, we have to predict how much this free cash flow can grow. We have to predict a growth rate for it. And there are various methods which we are going to discover now. How do you predict the growth in the free cash flow? Because without that, this is incomplete. This we have taken into picture without the growth for 1 year. But free cash flow, you have to do it for multiple years, 3-4 years, right? Let's see how it's done. So now we are going to focus the growth in the free cash flow. Okay. There are 3 methods that can be used to focus that growth. You should know all the 3 methods. In the exam, out of these 3, any one you have to use. And how do you know which is the one you have to use? They will not tell you. You have to see what type of information is given to you to predict out of these 3 methods. Okay, and then accordingly you have to decide. You have to make judgments all the time. Okay, you have to make a very good judgment on what method to use. Number 1, it is known as historical estimates. You see what is the growth in the historic and just assume that that's how in the future the growth rates will be. Second, analyst focused. Okay, you see the market, what is the growth rate, and accordingly you will use that growth rate with some adjustments, of course. And third is known as fundamental analysis. Okay, you don't have to know the detail of all those things. Okay, just know, I'm briefly telling you the meaning, but there are 3 methods. And for fundamental analysis, okay, you can use G, the Gordon's growth approximation method. This formula will be given to you in exam formula sheet. It's there. The formula is G is equals to R into B. G is the growth rate, R is the retention rate, and B is your cost of equity. Okay, cost of equity you must be calculating, retention rate is given to you, will be given to you. Sometimes examiners can use tricky words. They might not say retention rate or this is how it's retained. They might say the other way. For example, dividend paid is 40%. What do you mean dividend paid is 40%? Then the retention rate is what? The balance 60%. Because if you have paid dividend, what is left over is what you have retained, right? So that 60% is the retention rate. That's how also they can use sometimes, and they have used it. But in the exam, okay, alternatively in your exam question, you can simply be told which growth rate to apply. Sometimes they give you the growth rate also. That also could be an alternative. If you're lucky enough, you don't have to calculate. They will give you the rate. So it's not all the time you have to calculate. Depends from question to question. But if they ask you to predict, you have to use this R into B. Okay, this is the only method. Historical analysis focus are just there, but they might tell you that in the history this was the growth rate. So accordingly you can use. If they do not give you any retention rate, any cost of equity, then you can go by that. Or they might say in the market this is the growth rate. That means it's an analysis focused. So you can use it. Now let us do question test your understanding 1, where we are going to focus growth in the free cash flow. Now we'll be doing test your understanding 1 and this question and next test your understanding 2. The 2 questions we'll be doing it in Excel. Okay, you are required to calculate the value of equity. So here a company is preparing free cash flow forecast. In order to calculate the value of equity, the following information is given. This is how information will be given even in the real exam to you. Okay, sales has been given. Current sales is 500 million. Growth is 8% in 1, falling by 2% per year. Falling by 2% per year means first year 8, second year 6, third year 4%, like that. Okay, and until sales level out in year 5. So this is a 5-year cash flow where they expected to remain constant. After that it will be constant. Operating profit margin is 10% for the first 2 years and 12% thereafter. Depreciation in year 1 is 7 million, increasing to 1 million per year. Every year 1 million. Over the planning horizon means 5 years. And the replacement asset investment is equal to depreciation. Incremental investment is 8% of increase, 8% of increase in sales in year 1. It's very important to understand this, what it means, but we'll see when we calculate. 6% of increase in sales in each of the following 2 years. Each of the following means second and third year, and after that 4% of increase in year 4. Tax is 30%, WACC is 15%. Market value of short-term investment is 4 million and market value of debt is 48 million. Calculate the value of equity. This question I'm going to do it in Excel, and when I do it in Excel, I will not be having the questions with me because as I switch this from this, I'm not able to record the screen. Okay, so what you are going to do is you anyway have this question in your textbook. If you have the soft copy, you can keep it with you. Okay, or take a screenshot if you don't have the textbook currently with you, whatever it is. Make sure this question is in front of you when I'm doing it in Excel so that it becomes easier, the number. Okay, so let's do it in Excel now on your ACCA website. Excel, not the Excel which is there in your laptop, because there are differences, and I have already done Excel in for my previous lecture. So if you watch that, that shall help you, right? Because there I've done a net present value question. I have discussed in depth how net present value can be done manually as well as with the formula. Okay, here the question is little bit different, but here also you need net present value. Okay, but anyways we are going to do it in Excel. So you land up to this page. Okay, when you come under AFM, okay, you will be coming to the CB practice platform. You need to log in with your ID and your password, and then you will log in, you will land up on this page. You need to select AFM, and blank workspace, because since we are not using the past paper question, we are taking the question from the textbook. That means we don't have the question there. Okay, it will appear like this to you if you have not worked on it before. So you need to assign it, and here on your left hand side you can see this blank workspace. You need to click there, start, and you will land up to this page. I have explained this in my previous lecture yesterday when I did, but I'm again repeating this because maybe for some of you might have not watched my previous lecture. This is the first, so you need to know how to start with when you appear. So the things I'm not going to repeat again. I mean the functions and what are the tools and all in CV platform. I have already explained in my previous lecture, that is lecture 5. So please go and check out my lecture 5 to go through it, because I just want to save your time as well as mine. If I keep repeating it in every video, it consumes a lot of time. Okay, 30 minutes will go, I mean 20 minutes, at least 20-30 minutes will go for me to explain you, take you through everything. Okay, but know that this is how the page will, and you need to respond in the spreadsheet like this. You need to click, because we are going to work this on Excel. It's not possible to do it in the word processor. It has lots of calculations. Calculations are for a spreadsheet, theories, discussions are for word processor. You need to type. Okay, so make sure that you watch my lecture 5 towards the end. Okay, I think it's more than an hour that I was doing a question. So yeah, towards because it's more than 3 hour video, it's a 3 hour 37 minutes video if I'm not mistaken. So I think after 2 hours the Excel work comes. I'm not sure. Go there and check in lecture 5. Okay, you will get the link of lecture 5 in the end of this video. You can just click it and go to my lecture 5, or you can get it from the playlist AFM question. I mean September 2022 to June 2023 AFM lecture. That is the name of the playlist. I know it's very big, but I mentioned the time period so that people know that from this time to this time the lectures are valid. Okay. So now, as I told you before, make sure the question is there with you. I don't have the question cannot be shown on the screen, because if I go there, then it kind of I cannot screen record. Okay, it will go off. So that's the thing, and that's fine. So now you are supposed to, this is like a net present value question. If you have watched my lecture 1, you know how we do net present value in different columns and all. We write all the cash flows in different years. Okay, so here we start with the year. Okay, double click on the cell so that you can type year. How many years? 1, 2, 3, 4, 5. Okay, and after that you have on 5 onwards. That means after 5 years there is no limit. Okay, good. I can beautifully self-aligned, center aligned, so that it looks a little presentable. Okay, and then I'm going to start with sales. Okay, start with sales whenever sales is given. So they told that first year the sale is what? 540. Okay, it needs to be increased every year by what percentage? What is the percentage that it needs to be increased? By 6%, right? 6% in the, okay, so increase this by 6%. If you want to increase this by 6%, how do you do that? Equal to, okay, see here how we are doing. You can use a calculator for that also. Okay, and but I'm not using calculator, because if you use Excel, it's more convenient. It copies in the other cell also. If you use calculator, every time you have to use calculator. 1.06, okay, to the power 1, but no need to write to the power. If you want, you can write, but I mean it's no use. To the power 1 means it's the same thing. So into 1.06 for the second year. Okay, you see, But if the interest rate is same, 6%, 6%, 6% for all the years, you can just drag it and copy paste to the other cell. But if the growth rate is different, okay, every year growth rate is different, you cannot do that. You every time individually have to multiply with the growth rate. So for the third year, what it will be? They told sales will drop down. I mean, it will increase by 2% less. That means it's going to increase by 4% this time. Okay, so because it's going to increase by 4%, this multiply by 1.0 to the 1.04. Okay, you see? Did you see that? Then again it will fall down by another 2%. So 6, 4, and then 2%. So this you have to increase, sorry, here, equal to, the moment you press equal only you can perform a function, otherwise you will not be able to do it. Remember that, multiply by 2%. Okay, you don't have to put any power to the power 4, anything like that. Okay, because it's just for 1 year, because just that for 1 year the growth rate you are doing, I mean every year, but the growth rates are different every year, so you don't have to show to the power. Now for the 5th year onwards, there is no change. I'm sorry, there is no 5, it's 5 onwards. Okay, so you cannot delete this cell from here. Okay, unlike your normal Excel how you have that option, so you need to write it again here, 5 onwards, delete it here. Okay, so for here what you can do is just copy paste this. When you copy paste this, it will show like this. Why? It will show what it has done from here to here, right? This will be multiplied by 2% again, so you cannot copy paste like that. Okay, there's a way of copy pasting it. It has a functions, right? When it has a function to it, you cannot copy it like that. When you're copying this, copy paste special value, only the value you want, or if you want with the formula you can do it. Okay, but better to do it with the formula, so that examiner could go and check there that this is the formula. Okay, so we'll do that. But the moment you show it with the formula, you cannot do any changes to the number. Copy paste special, okay, formula. Okay, you see, it will copy the exact same thing, but it has the same formula. Just click both the cell, you will see here is the same formula. Okay, now what do we want? We want what? Operating profit. Or you can just leave one line and then write the operating profit whatsoever. It does not. Okay, I'll write it here only. Operating profit. You see, the moment I did it, it's coming on the second column also. So what do? I will extend this. So now it looks a little presentable. Try to make your answer, even calculation, very presentable in Excel. So that is very easy to read. What is the operating profit? How much will be the operating profit? Operating profit is 10% for the first 2 years. Okay, 10% of the first 2 years means 10% of what? 10% of the sales. Okay, so let's take 10% of the sales equal to 0.1 into this, enter. Okay, you can just take it, copy, drag this to the other cell, because next year also is 10%. But the third year, okay, what about the third and the fourth year? For the first 2 years 10% and 12% thereafter. That means all the third and the fourth year and 5 year onwards it will be 12% only. Okay, so here equal to 0.12 multiply by this figure, enter, and just take it to the other cell. Take it to year 4. You can undo always, okay? Remember, when you are dragging it to the other cell, this plus sign has to come down. Then only you can take it here. Okay, automatically it will take 12%. Because for both years it's 12%. But here when you are taking this cell, it is the same as the 4th year. Okay. So copy, paste special. You need to again click formula. Okay. With the formula. Now, from operating profit, you need to deduct tax. With tax, remember the number you put has to be negative. Try to, okay, we have this thing also. Way of putting a negative number here. You just cannot put bracket and then the number. If you just put the bracket and the number, it will not take it as a negative number. It will take it as a text. We have a way of formatting it in, okay. So just write 16.2. Just write the number in a positive way. Okay, sorry. We need to calculate tax 30% of the operating profit. So equal to 0.3 multiply by this amount, enter. Okay, now tax is 30%, so you can just drag it to the other cell. Okay, and when you're coming to the 5th year, it is just same as the 4th year. So this copy, sorry, yeah, copy, paste, special, again click the formula. Okay, okay, and we'll change the number. Don't worry, there are so many decimal places. We'll make everything to the one decimal place at the end. That will do at the end. So here, tax, select all the cell. This needs to be a negative number. So what are you going to do? Format cell, go to format cell, number, and you see negative. This is how you're going to show the negative number. So just put minus next to it. Just after equal, just put a minus and enter. Automatically it will take it in bracket because it's a negative number. Okay, but it will take it as a whole digit number if you say the decimal went. So you can just drag it to the other cell. You see, automatically everything will be negative then. Then we have depreciation. To check whether this is a negative number or not, okay, it's working or not, just check the sum function. Okay, if it's deducting this number, you can just take all, that number will be deducted. That means it's working perfectly, otherwise no. Okay, so in this case this is working. Okay, they have deducted 16 after adding this two. We have depreciation. Which needs to be added or deducted? Added, because we want to convert the profit to cash flow. What is the depreciation? What is the depreciation? Year 1 it is 7 and it will increase by 1 million per year. Okay, so it will be 7, 8, 9, 10, like that. 7, 8, 9, 10, sorry, 10 and 10, like that. You can just type it. Okay, then the answer that you are going to get is operating cash flow. Okay, just maybe we can just underline this, underline this. Now what are we getting? Operating cash flow. So operating cash flow will be how much? Just the sum function. Some function from where? From operating profit. Okay. So it's 44.8. You can drag this to other cell. You see? Now comes the replacement asset. Don't worry about so many decimal, we'll adjust it at the end. Replacement, okay, I'm not writing, okay, replacement assets. They told replacement asset is equal to the depreciation. Okay, so 7, okay, just put -7. -7, if you put -7, it will not work. You need to format it. Anyway, just put -7, okay, put the minus figure. -8, -9, -10, and -11. Sorry, 10. Now go to format cell. You need to format this because one is in bracket, one cannot be in this thing. Select here. The second, this one, because if you select this one, it will become red. There is two way of giving negative answer, either like this minus or like this in bracket. But I feel bracket is easier, right? But in any way you can present it's okay. If you want to put it, show it in terms of minus rather than bracket, that is also fine. Then we have incremental asset. For incremental asset, we have working one. Always label. If you are doing a working for particular thing, you have to put like this, working one. Under which working you will get it. Okay. So let's do the working one separately. You need to keep some space, or maybe you can do it on this side of the screen. Okay. Maybe we can do it here rather than going down. Okay. Working one. You need to label it like this. You have to show the increase on this one, on how much the sales have increased. So sale was 500. Just okay, current sale is 500. From there it increased by 8%. Incremental investment is 8% of the increase in sales in year 1, then 6% of increase in sales in the following 2 years, and 4% in year 4. Okay, how do you do this? You have to see how much your sales have increased. On that increase you have to take 8%, 6%, and 4%. Okay, so here it is 8% multiply by, okay, you have to put equal to 8% multiply by, put bracket is very important, 540. Okay, how much it has increased from 500 to 540? Okay, so the difference, on that difference you have to put 8% and then enter, which is 3.2. Okay, for the second year it is 6%. Okay, equal to 6%, you have to put equal sign, equal to 6% multiply by, you see, the moment you don't finish the number it will go. Six percent of what? From 570 to 4. From this minus this, you have the number already in you, so it's very easy. Enter. 1.944. The third one will be equal to 6% again multiply by bracket, you already have the sales. Okay, from here minus this, close bracket, and finally the last one is 4 equal to 4% multiply by this minus this. Okay, just we'll be showing this in this cell like this. Now what do you do? Now what do you do? Just simply go and put this copy. Remember, when you're copying here, paste it with the formula. Okay, paste special with the formula. Same for the others also. You see, it's very easy when you know how to do the calculation. And what about the 5th year onwards? What do you do for that? It is 0. Negative 0. So the moment you put negative 0, go here, format cell, use this as a negative. It will not show, it's okay. It does not matter. Okay. So now what do? You get the, what do you get? Free cash flow, FCF. How do you get the FCF? Just the sum function. From your operating cash flow. You start from here, this is the starting point. Right? No, I think, yep, something is wrong. Incremental asset, this all needs to be negative. So just put a negative to it, minus, and format the cell. See, before you copy paste, do it in one cell and then take it to the other. But if you do it like this, in all it is showing -3, -3, -3. So you cannot take it to the other cell because the thing is different. But you can put a minus. That means individually you have to make the changes. Format cell, this. Okay. Format cell, this. Okay. Format cell into negative. It will show it as 0. Okay. So because it will show it as 0, you have another way of doing this. Undo. Okay. If I do undo, everything changes. Just wait a minute. Okay. Now itself will format all this number to 1 decimal place. So you go here, click all, go here. It is showing into 2 decimal places, but if you want 1 decimal places, format cell number, no, it will, okay, we'll leave it to 2 decimal places. There is no harm in that, because if you want to round up to 1 decimal places, you can, there is a formula called round, put the number, then comma, and how many decimal places you want. That also you can do, but let us leave it now. That's not very important right now. Okay. So incremental asset, copy. Usually we do with the formula, but I will just paste here the value so that I can do the changes. Okay, even though it's 3 here it's 3.2. Copy, paste. You see, the moment you paste, it will come reference because the formula was here. So copy, paste special. Okay, copy, paste special. Okay, you need to extend this. Okay, it is 0. But if you click here, you can see the number here, and here it is 0. All this is minus. Or first, what you can do is round this up to 2 decimal places. Like this. After that, you can give negative. Because the moment you show bracket, it will bring it everything to whole number. So you can put minus sign to it. Like this. Now perform the sum function. From operating cash flow, deduct this too. Okay. And drag it to the other cell. Even this. Then we have, okay, this also you can format to 2 decimal places by clicking here. Then we have, you need to discount free cash flow as well. Present value factor. What should be the present value factor? Tell me what is the present value. What is the WACC given? WACC is given as 15%. Okay. So what rate should you use? See, to use here, go to this formula sheet. Go to your discount factor table, present value table. Discount rate is what? 15%. First year it is 0.870, 0.756. From here you are going to get the figure. You cannot copy paste it from the table. I've shown it to you yesterday. So you need to type it. 0.870, 0.756. Make sure that this things are there rather than directly multiplying it. You need to put this here. 0.572. And when you come to here, you need to be a little careful. What is it? This is forever. So when it's a perpetuity, it is like this. 1 divide by, okay, you need to put equal sign. Equal 1 divide by cost WACC. WACC is 15%, just 15%, not 1.15. Okay. This is the thing. Then you need to multiply this with this 4th year discount factor. Enter. It's always the previous one. Okay. I mean, the previous one is this one. Okay, this you can show it in 2 decimal places. Now what is it? Present value. So present value, just you need to multiply the present value with the, sorry, FCF with the present value factor. Enter. And take it to the other cell. And make sure all are to 2 decimal places. Like this. After that, what do? You find the total present value. Isn't it like similar to like net present value, right? So this is a sum function. Take all, enter here 2 decimal places. Then you need to deduct or add. Here you need to add short-term investment because it will give you return. What is the short-term investment here? It is 4 million. Market value short-term investment is 4 million. This 4 needs to be added. Keep this in 2 decimal places, which is the value of the firm. Okay, it is simply the sum function. Two decimal places here, this one. You see, keeping everything into a 1 decimal places makes it very easy to look at the figure. So then you have to find the value of equity. So deduct market value of debt. Never forget to deduct debt when it says market value of equity. If they say total market value, then no need to deduct. It is 48. Just put minus 48. Keep everything to 2 decimal places. It looks very presentable. Then value of equity. This is what the question asked. It is sum function. This now you can keep it to 2 decimal places like that. You see what happened? Maybe I can make it bold, or maybe I can even highlight it like this to show that this is the answer. You see, this is how you can do any question on free cash flow. The only difference is, see, till your total present value is like a net present value calculation. After that, adding investment, deducting debt is the only difference. That's it, to get the value of equity. Mostly this value of equity question will be asked in your acquisitional merger to value a company. For you, it might stop till here, total present value. It might stop till here because your one is investment appraisal. For that purpose, we are using. Now, with this understanding, similar way we are going to do test understanding too. Just go up and see. Everything is very neat. It looks very neat, professional, and easy to see. Suppose I click any cell, I can see the working here automatically. This is how you need to show your workings in Excel. Examiner will understand. Okay, you don't have to write the formula in the Excel. It's only numbers. And maybe if workings and all come like this, maybe sidewise you can do like this, but you have to label it. Or maybe below the main table you can write your working one here also. But the problem with this is, how do you know how much space you have to leave? Here you cannot add or delete cells. If it was, you could have done it. So sideways also you can do, but down also you can do. If you can estimate that this much space you need, leave it and don't never show the working in the main table. Never. It should always be separate from this. Okay. So that's it for test understanding 1. Now let us do test understanding 2. Use of free cash flow to equity in valuation. As I told you, this you can use it in valuation of a company, which we'll be doing in more detail for acquisition and merger. For our investment appraisal, we don't need for valuation. But certain things you have to know. That's the reason I've included it here. Okay. Previous calculation have found equity value by how? You discount. Previous calculation means the free cash flow. That is the meaning of previous calculation. You discount your free cash flow using WACC. Okay, because I told you free cash flow means it's a value to the whole firm, value of the whole firm, both for debt holders as well as equity holders. So you discount using WACC, and then you deduct the debt value, because we are finding free cash flow to equity. So you have to deduct VAT to find free cash flow to equity. If you do not deduct VAT, it's just a free cash flow. Okay, it's known as free cash flow to equity, or you can say free cash flow to firm. It's the same thing. Or there is another way to find value of equity. It can be found directly. How? You can discount the free cash flow to equity itself at the cost of equity. Now do you get the difference clearly? Free cash flow you discount using WACC and you deduct debt value. Free cash flow to equity, do not deduct WACC, no need, just discount using cost of equity, not WACC. So equity for equity. Okay, that means free cash flow to equity at cost of equity. You discount. It's very easy to remember it this way. That's why I've made it in bold. You see, and even free cash flow to equity. Equity is in capital letter so that it's. I wanted to emphasize that word equity. Equity for equity, and free cash flow to firm WACC. Remember this always. You need to be very careful because this is an area where students often make mistakes. You can go wrong. Even though it looks very easy now, trust me, in the exam, you might be given both WACC and cost of equity and you get confused. Because we have been in this mindset all the time, WACC. Not all the time you have to use WACC to discount. Sometimes you have to use cost of equity also. Like in my previous lecture, how for adjusted present value to calculate base case net present value, we had to use cost of equity to discount. Similar for this. So in the simplest case, if FCFE, that is free cash flow to equity, is assumed to be growing at a constant rate into perpetuity, the following formula can be applied. What is it? This formula you should know. It's not there in the exam formula sheet. That is, this is, I mean, forever it keeps growing. I mean, they don't say. They say after second year or third year, maybe the statement will be like this in the exam. After third year, the cash flow keeps growing at 30%, 40%. Or they will say like that. They don't give you a time that from this time to this time the growth rate is this much. Okay, that's for under that condition. This is the formula. Whatever your current FCFE you have, FCFE into 1 plus G, that is 1 plus growth rate, divide by cost of equity minus growth rate. Cost of equity minus growth rate, not back, because it is FCFE. Remember this formula. We are definitely going to do a question now. And the formula is based on a dividend valuation model theory. If you see this formula very closely, FCF is 0 into 1 plus G, divide by K, E minus G, you can think of one model. What is it? It is known as dividend valuation model. We are going to cover this in detail when we are going to go through acquisition merger to value a company. Okay, but we have already done this dividend valuation model. Can you remember under which topic? Let me see how strong your memory is. If you have seen all my lecture, you know what I'm talking about. Yes, exactly. To find the cost of equity. To find the cost of equity, we use this model. Remember 3 methods to find cost of equity? If you forgot, go back and check the lecture where I've discussed about how to find the value of equity, cost of equity. This I discussed for WACC when I did my lecture on WACC. One is CAPM, one is dividend valuation model, the other one is third one, M plus M theory, Modigliani and the Miller's theory. Yes. So this dividend valuation was there, but we are going to heavily use it in valuation. So for that, I kept it here. I didn't go further in this valuation model theory. Okay. Now let us do test your understanding to the final question for this lecture and end this lecture. Test your understanding too. Here, let us first read the requirement. Calculate the value of the equity in total and per share by using free cash flow to equity and discounting it to the cost of equity. So everything they have clearly written and told which discount rate to use, what are the things you need to find out. Okay, so let's read this. You have been give, okay, is considering making a bid for a rival company. This is more like an accusation question, but we are more focused on the free cash flow technique, right? You have been given the statement of profit and loss, and you have been given the selling price that are expected to rise 3% per year for the next 3 years and then stand constant thereafter. Sales volume 5% and stay constant. Cost of sale is completely variable cost, okay, and other operating expenses including depreciation are expected to stay constant. He invested 15 in non-current and 2 in working capital, and they are constant. Financing costs are constant. So wherever things are same, marginal tax is 28% and it is payable in the year in which it arises. Book depreciation equals tax depreciation. They have 500 million shares in issue. 9% is the WACC and cost of equity is 12%. Okay, so now let us do this question in Excel. So we are back here, back to Excel, and if you see, Excel is already filled because I did clean the one which I used for test your understanding 1. Okay, so I'm going to remove some of it. I can keep for year 1, year 2 and year 3. Okay, this 2 I can just erase it. Okay, you see, I can keep the same table. Okay, just use it for 3 years and it starts with sales. This time they told sales price is increasing 3% every year, volume is increasing 5% every year. Okay, and you have been given the statement of profit and loss with the sale figure 285.1. Okay, so there, here you need to put equals. Okay, it is equal to equal to 285.1. Okay, increase this by 5% and 3%. 1.05 multiply by 1.03 because sale price is also increasing, volume is also increasing. Just enter. Okay, next, just see, we'll see what happens when you take it to the other cells. You can always undo. Let me see if I try to copy. It will copy the same thing, right? So you should not do that. Okay, when you're taking it for the second year, what are you going to do? Just when you're doing it for the second, on this, okay, you are increasing this by 5% and 3%. Okay, and for the third, same. Just I am removing the underline. So on this, you increase it by 3%, the selling price, and 5%. Okay, so these are the 3 sales that you get. Make sure that you do this with me, okay, while I'm doing. Log in to your ACCA this thing and keep doing it. Then we have cost of sales. Basically, we are making that profit statement again. Cost of sales. Okay, so cost of sale will increase only according to the volume because it's a variable. Do not increase it by sale price. Has nothing to do with cost of sales, but increase in sales volume will increase your cost of sales. Why? It's 100% variable. That's what they've written. So you have to increase it by 5%. What is the current cost of sales that is already given to you? Increase that by 5%. That is 120.9. Increase this by 5%. You see? Same for this. Increase this by 5% and increase this. Always the previous year will be taken, increase it by 5% and put it in the next year. Okay, underline. Now what is it? Gross profit. Okay, so gross profit, when you're taking it, make sure that this are minus number that you are taking. Okay, automatically all are minus. So when you're taking this, make sure that you did the sum function. Equal sum, take this too, enter. Automatically it will deduct because this is minus. Okay, and you need to take it to the other cell. Now you need operating expenses. Okay, operating expenses will be same. It is given as what? 66.9. Okay, so operating expenses will be 66.9 only, all the 3 years. It's constant. Okay, but that 66.9, they'll be negative. So just put a negative figure to it. Minus. 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 Okay. Next, financing cost. You need to remove the bracket, underline, right? Double click. Now it is financing cost. Financing cost also will remain same, 10. It's already minus, so just minus 10. So just take it to the other two cells. Minus 10. Okay, focus profit before tax. So profit before tax will be this. Profit before tax, PBT. What do you do? Equal to some function. From gross profit, okay, enter. Drag it to the other cells. Then we have less tax. Tax is what? 28%. So just take equal to 0.28, multiply by this amount, enter. And it's minus, so put minus figure. Drag it to the other two cell. Okay. Then you need to add back depreciation. Okay, don't forget that. Plus depreciation. How much is the depreciation? Depreciation also will remain constant, which is 12.3. It's already given. It is included under operating expenses. 12.3. Okay, 12.3, 12.3, 12.3. Then what do we have? Less capital expenses. Basically all expenses, capital expenses and all you deduct. Working expenses you deduct. That's what you do. After you add depreciation back. Okay. Less capital expense, which is also constant. Even working capital is constant. That's working capital. Okay, so how much is the capital expenses? Capital expenses is 15 and working capital is 2. It has been given under other information. Okay. This also make it in 2 decimal places. So that looks, and this a minus. Before the number put minus, not after. Okay. So now, what else? Already interest and tax has been deducted. Okay. So you get free cash flow to equity. FCFE. That's what it is known as. How do you get it? It's just simply the sum function of from here, enter. That you can just take it to the other cell. Okay. Now, what else? You need to discount it. Okay. Discount at what factor? WACC or cost of equity? You need to decide because you have been given 2. Cost of equity. Exactly. This is free cash flow to equity, so at 12%, not at 9%. Okay. So you need to go to the discount factor table and get it. .797. Okay, and when you are doing it for the this one, because it's 3 year onwards, so it's equal to this divided by the cost of equity. Make sure that you round this to 2 decimal places from here. Definitely this number will be very great. Okay, because it's forever. So now find the present value. Okay, it is the sum function only, but no, it's not the sum function. It is just this multiply by this. Enter. You can copy paste to the other cell. Okay, then you have to find the net present value or the total present value of all, which will be just the sum of all the 3, equal to sum of all the 3 present value. Okay, basically your job stops still here if the question is for investment appraisal, but since this question asked value of equity, total value and equity per share, I will show that also, because later we are not going to come to this question and do that. Okay, so total value of equity will be how much? How many shares are in issue? 500 million shares in issue. It has been given under other information, right? And you have been given the present value also now. So you divide this net present value, okay, by the number of shares, 500. Enter. So per share, this is per share, okay. Per share it will be 1.57. If you want to find the total value, it is just your net present value is only the total value. Your net present value is the total value of the firm, which is 786.35. But if you want to find value per share, divided by 500, because you have issued 500 shares, so 1.57. That's it. So now let's summarize everything. So now let's summarize this into FCF and FCFE. FCF, we know that we have to deduct debt, and also we have to discount using WACC. Free cash flow to equity, on the other hand, is we discount at cost of equity, and we do not deduct the debt from the total value, because once you discount it at the cost of equity, whatever the value it is it for the firm. So that's the thing. That's it. This lecture is a short lecture, okay. We don't have many things to cover. It's just only these two items. So this is pretty easy, and go make sure you do questions on FCF and FCFE from your revision kit. I've already have a revision kit solution as a separate playlist for all my AFM questions, which I've done, I think, 2 years back. This was done, but it is still relevant today because nothing has been changed in the syllabus till then. So you still can go through those videos. You still can take help of it. If anything has changed, I will make you update. I will keep you update. Nothing has changed. You can use still those questions. And one more thing, for free cash flow to equity, it determines your dividend capacity. So whenever the question says what is the dividend capacity, you have to use FCFA. Okay. That's it for this lecture. Thank you for watching, and I will be seeing you in the next lecture. Before I leave, if you have not subscribed to my channel, please do subscribe now. Hit that bell icon so that you get the notification of all my latest video. I keep uploading videos every day. Okay. My frequency of the uploading videos is every day. Okay. I don't know which subjects I upload each day. I try to keep my attention for all the 4 subjects, that is AAA, AFM, SBL and SBR. So I keep uploading all the 4 lectures. Okay. Maybe you're doing more than one subject. Maybe it's just not for AFM that you come here. No worries. I have SBL, I have SBR and AAA. So make sure that you do it, and you'll be updated with my latest video. And thank you for watching.